Good morning, everybody. Live in a few short seconds. Good morning to KB, to Mags, to Hidden. I believe we have a certain Yikes in chat, or we had a certain Yikes in chat. Good morning to USD and Bed Shahi. I hope you're all doing incredibly well. Good morning, everybody. Welcome back to Crypto Warehouse. My name is Mike. It is Friday the 13th. Not only is it Friday the 13th, tomorrow is Valentine's Day. Now, a little bit of a tip before we start the show. If you want to go out for a nice meal with your missus or your mister, do it the day before. You'll get hotel reservation, you'll get a restaurant reservation, you can even order the takeaway the night before. That's how you win on Valentine's Day. You do it early, you get it out the way, you don't need to go and sit in a room with a load of other miserable looking people trying to celebrate Valentine's Day. Do it the day before. Now, it is Friday the 13th, and it is a bloody Friday the 13th. Bitcoin is below $67,000 the last time I checked, and we are going to have a look at whether winter is coming for Bitcoin. We're also going to have a look the AI super cycle. Is that going to push Bitcoin over the line, get us back towards $90,000 and $100,000? We're going to look at Chondo. That's what we're going to look at today. We're going to look at a $2,000 price target for Solana. We're going to look at WorldSwap. We're going to look at ADA and Zero. What do they have in common, other than many people thinking ADA is going to zero, especially after Charles wore his McDonald's outfit at Consensus? And then we're going to talk about Asta at the end, and we're going to talk about them launching their own mainnet. So there's a lot to get into. We're not just going to sit here and be sad about Bitcoin, okay? Don't be sad. Be happy it happened. That's the way I would look at it. Good morning to Joe. I hope you're doing incredibly well. I think I said hello to Hidden as well. I hope you're doing incredibly well. Now, let us head over and have a look at some charts and see where we are, because Bitcoin's doing that really depressing downwards, sidewards action. Yes, we're up from where we came crashing down to. Hung around at 68,000. We're now hanging around just below 67,000. Now, maybe the range that we're in now is about 64 to 69,000. That's the previous all-time highs that were probably, April to November in 2021. We're kind of around that range right now. Ethereum is struggling to hold on to $2,000. It's not good. Look at XRP. It's down at 136. Okay, we're going to be talking about a 75-cent XRP soon, and I don't really want to do that, okay? I want to retire to a beach with a cocktail and a cigar. I can't do that on 75-cent Cardano, or XRP either, should I say. BNB looks like it might go back under $600. Probably the trade of the century so far, not of the year so far, has been the fact that we sold our BNB at $945. That, I think, was the trade of the last 3 or 4 weeks. Solana is below $80. We are probably going to buy some more Solana this weekend. We bought Solana in the $90 range. We've bought it in the $80 range. We're going to buy it in the $70 range. And if it keeps going, we're just going to keep buying it. We're underweight on our Solana holdings. It's not that we think it's better than everything else. It's just we've got a massive allocation of Bitcoin, massive allocation of Ethereum. We need to top up our Solana, and this is the perfect opportunity, and that is how you should be viewing the market right now. If we have a look at fear and greed, it's 8. Okay, now traditionally, and I have made reference to this, if you go and watch the fear and greed video that I made 2 or 3 weeks ago, fear and greed is actually a pretty good indicator, okay? But it doesn't do a great job of indicating the bottom. It does a really good job of indicating the top. I think that's the right way around. We're at 8. Traditionally, in my opinion, this would signify some kind of bottom. We're at the kind of fear and greed we were at with COVID. So that's to kind of put it into context. COVID, we were shutting the world down. I don't think we're in that bad a situation. We don't really have that many on the horizon. We've got hype still above $30. If that goes below $30 towards $26 to $22, I think that's a great price to get Hyperliquid. 24-hour gainers. Before we move on then, Humanity is all over the place. And I think that token sums up where we are in the world right now. It's down, it's up, it's down, it's up. River, we were talking about Crimea River not long ago. The price went absolutely rocking on outside. We've had 18 storms in 2026. It's only the 13th of February. What's that? 44 days. So we've had a storm every 2.5 days. It's ridiculous. I haven't been out of the house. We haven't been to the office to stream. It's not a good state of affairs. Polygon is recovering, but again, it's below 10 cents. Nothing to be happy about there. Losers. Layer Zero is down. Probably on the news that we're going to talk about with Cardano. Only joking. Canton is down. ICP is down. Pancake is down. World Liberty Financial, we talked about this on Wednesday. It was at 9.99 cents. I think anything between 7 and 9 cents, or maybe even 6 and 9 cents, is a really good price to pick up World Liberty Financial. We're not going to sit here and tell you it's going to go to the moon. I think 20-25 cent range would be brilliant to get to in 2026. And again, we've said, and we're going to stick to this, I think we finished the year higher than we started. And the more I say that, the more you're not going to believe me, because I was saying that when we were in the $85,000, $88,000 range. And I think we entered the year at about 92,000, 93,000. We're at 68,000 and I'm still sticking to my guns. I think we'll be over 90,000 by the end of the year. And that's because I think we go down. We either go down, across and up, or across, down and up. I think one of those two things is going to happen. And we're going to give you some news from people who may or may not agree with me, who may or may not be multinational banking and financial institutions. We shall see. Yes, KB. I mean, I don't know how a storm can affect a stream because it's fiber optic cables. It's all underground. I really don't get it. Now, Michael van der Pop, this is a phenomenal overview of the recent periods of extreme fear in the markets. What happened? We all went up. These are the different events that happened and where Bitcoin went to. We're not going to go through them all, but the Mt. Gox crash, I think the reason it only got to 9 and no lower is because it happened so long ago. It happened, 2014 was it? Something like that. Then, if we go forward to COVID, it came down to 9. FTX crash, which happened maybe 3 or 4 months after, 2 or 3 months after, it came down to 12, and now we're at 5. Now, listen, this does not say we are going to go up. This does not mean that we're going to go to 120,000. What this means is that we have entered a very, very exhausted stage where the bulls have got to do something, okay? We could get to $50,000 very, very quickly, okay? I did say only about 3 or 4 weeks ago we could very likely hold the previous all-time high, stay above that, probably stay above 74,000, maybe even stay above 80,000 and just go sideways. We've gone all the way down to $60,000 and we've done it in February. We've never seen this speed of correction, and I've covered this in a previous video. The 2022 correction, which happened after 2021 as all-time high, that took 12 months to fall 50%. 12 months to fall 50%. Now, you work forward. November, December, January, February. 4 months. So a third of the time, we've done exactly the same move. And we've done it in a third of the time. Now, there are people hypothesizing this is the bottom. We've had a really quick bear market. I don't think that's going to happen. I think before summer, we have some kind of rally. then we will dip, and then we'll go up. That's my hypothesis I've had all year. That's how the cycle has kind of played out. And until something changes that, that's what I'm sticking to. So just because we're at 5 now, it doesn't mean we're back to $100,000 in April and March, okay? Just bear that in mind. This is an indicator of the sentiment of the market. It doesn't mean we can't get worse. Doesn't mean the price can't come down. It's just normally in this range, we do have a bounce. Now, we've covered this. It's a running story that we've liked to cover because I think it's really important that you're educated on this very important topic. And that is the quantum threat to Bitcoin. You hear people talk about the fact that we're going to hack Bitcoin, Bitcoin's going to be destroyed, we're going to ruin it. Your auntie comes to Thanksgiving and says, yeah, I know you've got those magical internet coins, but isn't quantum computing going to destroy it? No, it's not. And I have said all along, 2 things are going to happen. Number 1, Bitcoin would not be the focal point of a quantum attack. You have nation states to go after, far bigger. Your banking system to go after, far bigger. Don't forget, Bitcoin is only, crypto is only a $2.3 trillion asset. It's not that big. You might think it is, but it's not in the grand scheme of things. Gold is what? 25 trillion, 24 trillion now, whatever it's come down to. It's 10 times bigger than Bitcoin. Why would you go after Bitcoin? So, either way, that's one element. The second element is I have said all along that Ethereum, Solana, Bitcoin, the big boys, XRP, they'll all create quantum resistance within the blockchain. And here we go. Bitcoin devs have taken steps to address the quantum threat, an updated version of BIP 360. So these BIPs, you have them in Ethereum, you've got EIP, you've got them in SIPs, you've got Solana ones. They are like improvements to the blockchain. So these are suggestions that get discussed in an open forum on how things can be improved, whether it be the block time, whether it be the block size, whatever it might be. This is BIP 360, and it's been merged into the official Bitcoin BIPs repository. The proposal introduces Pay to Merkle Root, or P2MR, a new opt-in output type that removes Taproot's quantum vulnerable key path spend while maintaining compatibility with TapScript and script trees. Don't want to get too technical on this. So basically, it removes the element of the technology that is vulnerable to a quantum attack. Now, what does a quantum attack do? Let's say you have a key to your wallet, and that has 17 billion combinations. It's unhackable right now. It would take decades, hundreds of years, whatever it might be. With quantum computing, it might hack it in an hour, in a day, in a week. So your wallet is safe. Obviously, Satoshi's wallet is not safe. That would be the point of attack. So this is to try and get around that in one way, shape or form. So the post-quantum signature schemes using TapScript and scrapped tree optionality, spend time implemented as a soft fork. So a soft fork means that there's not going to be a new token created. Now, all of this is going to roll out over the next 3 or 4 months. If anybody stops you in the street, not that they would, but if they did, and said to you, isn't Bitcoin going to be hacked by quantum computers? First of all, ask them, who are you? Why are you talking to me? And then secondly, say, well, I think we're back. I honestly have no idea why storms affect my stream the way they do. Anyway, Meowfi has asked, buy the dip, or is it going to dip even more? I think we are going to go down a little bit more than where we are over the course of the year. I do think we're probably going to go somewhere in the region of $50,000. And the reason, not the reason, should I say, that's not it. The one of the videos I made back in maybe end of January was about my price targets for Bitcoin, and I've got 3 price targets. I've got 63,000, I've got 50,000, and then I think I've got $29,000. I absolutely don't think we're going to go to $29,000, but the pattern that we have suggests that we could go to $29,000. The other pattern, which I am more adhered to, is about a 60% correction, which takes us to $50,000. And then the $63,000, believe it or not, is kind of like where we're holding above now, and that is a 50% correction. And I am not the only person to say this. Standard Chartered, who were telling you that Bitcoin was going to go to $8 million by last Christmas, they're now telling you that Bitcoin is going to retrace to 50,000 and Ethereum retracing to 1.2k and then rebound later in the year. I'm on board on Bitcoin. I'm not on board with Ethereum. I think Ethereum's going to come a little bit lower, maybe $1,100, $1,200. But either way, we're in the same ballpark, which is unusual because normally these people are extremists. So they'll say it's going to $500,000 and then we get nowhere near. And then they say we're going to go to $50,000 on Bitcoin and we get nowhere near. This seems to be quite a reasonable take. They've also reduced the price targets for several major tokens, which tells you they're thinking the next phase could be more about clearing excess risk than non-stop upside. Another thing to bear in mind about Standard Chartered and a lot of Goldman Sachs type companies, they'll give you targets for the S&P for the end of the year. They might give you a target in January of, 8,000. And then it will get to maybe April, May or June, and they'll revise their target to maybe 7,800, okay? So the further out they are, maybe the more bullish they are. The closer they get to the event, the more they know about the macro, the more they kind of hone in their target. So this is common in stocks and shares, where events happen and the financial institutions, they will then issue maybe an earnings warning or a profit warning on a company if they think it's not going to do as well. They will issue a revised stock price for different shares. This is no different. So they haven't just done a U-turn and said we're all going to die, Bitcoin's finished. They're just revising their targets. And I don't think they're too bad. I think if we bounce off 50 and bounce off 1.4k for Ethereum, I think that we've got out of jail there. I think that's been a really good bear market. And again, I'm going to keep this opinion. Even if we go back up to $85,000, I'm going to keep that opinion. Now then, a couple of little things actually. One person that I disagree with is Benjamin Cowen. If your opinion is paid for, then your opinion is useless. Now, I don't think he worded this correctly, which is why I corrected him. If you're a car mechanic and I'm paying you to look at my car and I say, what's wrong with the car? I'll turn around to you and say, well, your car's on fire. I can see the flames from here. You've also got no tyres because they've burnt and your engine's about to blow up. Okay? You've paid me for my opinion. That doesn't make my opinion useless, does it? What I think he means is that if an agreed upon opinion is paid for, then it's useless. So if you come in to me and say, my car is perfectly fine, here's $1,000 to tell me my car is perfectly fine, and I say to you, your car is perfectly fine, and give me $1,000, that is a paid for, pre-arranged opinion. And I think that is what Ben is talking about there. You've got to be very careful when you say things like this, because we talk about companies that we like. We don't partner with anybody that we don't like. And I've said this time immemorial. We've got 4 major partnerships. If we wanted to have 20 major partnerships, we could. But then we'd be partnering with companies who we think are doing the wrong things. Trading platforms, AI platforms, all of those kind of things. We don't do that. We're very, very specific in what we do. We've been talking about World Liberty Finance since September and October. We've been talking about buying the tokens since September and October. And if they come to us and say, can we partner with you for a month or so? We are going to say yes. The same with Maple Finance. The same with WolfSwap. We will partner with people who we think are doing or have a net benefit to the industry. Now then, one other thing before we move on. This has taken forever today. CZ had an AMA yesterday, and the Oracle himself, as you can see here, was actually in the AMA and got to talk to CZ about the USD1, the Genius Act, how stable coins are going to shape the future of the industry. And of course, we would like to extend our thanks to CZ for doing that, because he is obviously a very busy man. Everybody wants a pound of flesh with CZ, so to take 5 minutes of his time is a great gesture on behalf of Binance, and we greatly appreciate it. Now, Bitcoin may already be entering the crypto winter, researchers warn. Now, we were told, were we not, a few days ago by another researcher that this was the bottom and we're just going to go up. So which researcher do we believe? That's the question. The slide has left traders squinting at charts and asking the same blunt question: correction or crash? I think going down 50%. I would say 50% was a crash, 30% was a correction. That would be my rule of thumb. But again, I think that's open to interpretation. Prices have tumbled. Others warn the data points to something colder. Oh, there's Jim Cramer. I mean, we talk about people we don't like in crypto. There are far worse people in finance, and he has to be one of them. Short Nvidia, sell Nvidia, Nvidia then does a 10x. Tesla's run its course, Tesla does a 4x. I mean, this guy he's hit every wrong decision on the way down that tree. According to XWin Research's crypto quant analysis, Bitcoin has fallen 46% from 126 to 67,000 after 5 straight months of losses. We've had a lot of downward action. The Fear and Greed Index sits at 14, although we now know it's at 9. Reporters note that net realised losses recently hit 13 billion, a level that matched the worst stretches of the 2022 slump. And again, we have mirrored the 2022 bear market. We come down, we go up, we get rejected at the bull market support band, and we come down. What I think has taken everybody, including me, by surprise is how far we came down. I said we would probably get rejected at the bull market support band and come down, but I wasn't thinking $60,000. I was thinking $74,000, $80,000. We went straight through those like a hot knife through butter. So this has been the same pattern, different prices, different numbers, yes, but the same kind of pattern. So in 2024, 10 billion of inflows helped lift the market cap. Then in 2025, more than 300 billion flowed in, while the overall market value shrank. That odd mix of heavy inflows and falling market cap suggests selling pressure is higher than fresh buying. Again, absolutely true. Based on reports, the capital flow numbers are the most awkward facts for the bulls. Money moved in, but value fell. Who is selling into that demand? Large holders, paper traders, or complex derivative desks might have taken profits or hedged positions. I think we've covered towards the end of last year that some of the OGs sold, and they sold a lot. But then we also showed you that the majority and more of all the new Bitcoin being mined and the OGs combined sold into the ETFs and Saylor and people like that, of course. So even though we are green, we have more buying than selling, we don't have much more buying than selling. And that's simply down to the sell pressure. Had those OGs not sold, we would very likely have gone on an even bigger run. But you can't say that. It's ifs and buts. It's all back to whataboutery. You know, we can't be doing things like that. They've sold, they're gone. Mt. Gox, it's gone. All of those old kind of skeletons, they've all gone one by one. I never expected the OGs to be a skeleton, but here we are. Some traders point to a quirk of memory. High nominal prices make pain feel milder. People don't want to relive the chaos of 2022. Reporters say the launch of spot ETFs and deeper institutional access have changed the market's plumbing, and that gives many confidence. And again, I would buy into that. I would buy into the fact that, and I've said for a very long time, Bitcoin has been broken by the ETFs because we have a flow of money. We have a new flow of money. We have a new source of buy pressure. Think where we would be potentially without the ETFs. Would we be at 40,000 now? Would we have topped out at maybe 90,000, 80,000? So we'd have put in a new all-time high, but maybe not that much. If we'd have had, say, a 50% correction like we've just had, what would we have done? We'd have come down to about 45,000. So I do think, and I have said before, I think Bitcoin has had its price moved up by around $20,000. That's the way I would look at it. So you take $20,000 off our all-time high, that's 106,000. Maybe we broke 106,000 without the ETFs. You then look at where we've come down to. We've come down to 60,000. Maybe we would have come down to 40,000 and bounced. Those things are all happening while the ETFs are buying. We've had a few red days, yes, but the last 3 or 4 days have been green. And I think they've they've saved us at this moment in time from even deeper corrections. Now, Bitcoin may be entering the crypto winter. That's the headline of this market. It is. We are 4 months into a 12-month bear run, if we want to call it that. That's why anybody who tells you that it's over right now, I think timing-wise is going to be wrong. And we're not going to go into the macro on it because we've done that before, and I don't want to bore the OGs to death. They're in here all the time listening to me saying the same thing. But we have a new Fed chairman, we've got the midterms, we've got rate cuts, we've got money printing. This year is going to be hopefully an expansive year for the economy, and if that's the case, Bitcoin will come down, move across, and go up towards the end of the year. That is the strategy I think that I'm going to stick to. Now, the real super cycle isn't crypto, it's AI infrastructure, says analyst. All I think about when I read things like this is going back 4,000 or 5,000 years, and you've got a group of farmers, okay, and they sacrifice a goat, and it rains. Then they just keep sacrificing goats, and it doesn't rain again. So they go, hang on a minute, maybe the god of rain doesn't want a goat anymore. Maybe it wants a sheep. And then they sacrifice a sheep, and then it rains. The god of goats is now the god of sheep. The god of rain is now the god of sheep. Hooray! And then it doesn't. And then they just go and, I don't know, sacrifice a dog, for example. And all of these things, it's all kind of like cultish behavior. We're always looking for one single reason why something has happened. And that is not how it works. Go back to look at, Bowling for Columbine, which was about whatever it was about. They blamed video games. Don't you blame them bowling? And that's the key. It's got to be one thing that's the reason. The money supply. We've had the money supply argument from Morale Pal, which then everybody jumped on. Oh, Bitcoin follows the money supply. We're going to be at $200,000. And it never did it? Because it diverged. Then it was something else. Then it was something else. And it was something else. And again, there's never going to be one reason something happens. AI data center spending is eclipsing crypto's hoped for supercycle as Bitcoin miners shift capital towards high-performance computing infrastructure. We did cover this, didn't we? What was the name of that company we covered at the start of the week? And I said it was a terrible idea. They sold Bitcoin at whatever it got sold at, $70,000. And they moved over to building out for inference, GPUs, AI, processing, all that kind of stuff. And again, my argument is that's great. They've just spent $350 million, or they're about to spend $350 million on, AI, GPU, infrastructure, whatever. Where is the money coming from to generate a return on that? And I think they've gone too soon. And if you look at what the Trump family are doing, for example, they're partnering with people, they're building data centers, and their aim is probably 3 years away. Now, when you look at people that are doing things 3 years into the future, they're the people that I watch because it's a well thought out strategy. AI is not big today. It will be big in 3 to 5 years' time. If all of these call centers are going to have AI operatives, that takes time to get rid of the staff to put AI in. The models have to be built. They have to be trained. It might take 2 or 3 years to get to that point. So don't believe for 1 second that that company that's moved from Bitcoin to AI, don't believe that was the right decision right now. I think it was a terrible decision. But I think building out a data center with an aim of maybe 3 years' time is the solution. And remember, most of these things don't come to pass. The Millennium Bug came and went. Didn't kill anybody, did it? Systems didn't go down. AI is not going to replace every single person's job. Anyway. Chainlink teams up with Ondo Finance to tap into DeFi's utility. Now, I think they should have come to an agreement and called it Chondo. It's instantly memorable, isn't it? What platform are you going to use? Oh, I'm going to use BlackRock S&P 500 futures. What are you going to use? I'm using Chondo. It's just got that lovely ring. I think Chondo sounds great. Even Chando, but that sounds a little bit like a Nando's. I'm going for a Chando's. It's got a nice ring to it. I think people missing tricks with names. I think that would be a great name. So basically, Ondo Finance's expansion into tokenized treasuries and equities initially drove its RWA scale, lifting TVL below $2.5 billion. As issuance and secondary trading volumes grew, pricing infrastructure became a structural constraint. Tokenized equities relied on scattered or partly centralized oracle sources, which made their value information slow, vulnerable to manipulation, and inefficient during market fluctuations. This really, I think, is the crux of a lot of the problems with tokenized stocks. If you tokenize a stock, there has to be a beneficial owner on the other end owning that stock. There are problems with yield on stock. Let's say you own a stock, physically own a stock that pays 3.5% dividend, and it pays it every quarter. Let's say it's 4% dividend. So you get 1% back. So you've got $1,000 worth of a stock, and you get $10 every quarter as a dividend. That doesn't really work properly yet when it comes to tokenized stocks. So although Ondo are great, they've been around for what now, 18 months, Chainlink have been around for about 6 years, it's still not there. The data feed is equally as important, because you've got a stock sitting on a stock exchange with a real-time price. That real-time price has got to get through Chainlink to Ondo, and then Ondo has got to be plugged into multiple different interfaces for you to then buy that stock. All of those moving parts are very, very difficult to all tie together, especially if there's a stock market crash or a crypto crash or whatever it might be. You've got to liquidate. You've got to buy, you've got to sell. It's just an entire mess. I think this is the right move for Ondo. They are standardizing. They're using Chainlink. Chainlink's got CCIP. It can move funds from one chain to another at the blink of an eye. It's safe, it's secure, it's not open to vulnerabilities like a lot of wormholes used to be. We don't even talk about wormholes anymore on this channel. 2023, 2024, when we were streaming, we were talking about all the different wormholes, and we were saying how wormholes are really open to vulnerability, and Chainlink fixed that problem. We don't talk about it anymore. So the integration will make it easier to accurately sell off assets, automatically adjust vaults, and carry out structured products. This makes the Oracle partnership a necessary upgrade instead of a marketing strategy. So for me, this is the obvious move. If somebody said to me, who should anybody dealing with stocks and shares, who should they deal with? The answer is Chainlink. Simple. If you want to have a yield-bearing dollar, and you want to have it on Base, on Arbitrum, on Ethereum, on Solana, on the Binance Smart Chain, Chainlink, it's the solution, it's the fix, it makes it all work. And you don't have to have 26 integrations. You can just find a partner on that chain and then use Chainlink in the background to connect your product with their solution. That's all you have to do. So standardized Oracle pricing has removed the final infrastructure barrier, converting tokenized equities from passive wrappers into collateral-grade balance sheet instruments. As tokenized fund capitalization surpassed 17 billion, Ondo's issuance and data stack positioned RWAs as yield-bearing collateral. Again, if you've got $10,000 worth of Tesla, and Tesla's doing quite well, and you see a dip in Bitcoin, you can use your Tesla stock as collateral to then take out a loan, obviously an over-collateralized loan, to then go and buy some Bitcoin. You've then got your tokenized Tesla, you've then got your Bitcoin, you're paying whatever it is, 5%, 4% to take that loan out, away you go. Really, really straightforward. Now, we have this issue with Solana. We don't have this issue with XRP or Ethereum on Bitcoin, and that is that the ETF for Solana hasn't taken off as quickly as the XRP and others have done. So we have this issue, but Solana is sending mixed signals. Over 1 million SOL pulled from exchanges as Standard Charter still calls $2,000 Solana price by 2030. Now, let's work this out. Okay. 2030 is this magical number that people have put in their heads. We are in 2026, and this is a bear market. 2025. Oh, are we there? I accidentally pressed a key. Yes, we're still here. So, 2025 was the bull run. 2026 was the bear market. 2029 will be the bull run. 2030 will be the bear market. I think this number has come about from the likes of Cathie Wood and the likes of Michael Saylor and the likes of Willy Woo and Rich Dad Poor Dad, and they've just picked the nearest round number to say Bitcoin is going to be $1 million by 2040. I think they just picked a random number, and it's a nice round number. This will be the bear market. If Solana is going to hit $2,000, it's going to have to do it in 2029 or 2033. And if you ask me, I think it's going to be 2033. I do not see Solana. Now, bear in mind, Solana got up to what, $300 in this bull run. What did it get to in the last bull run? $275. So it's not really rocketed, has it? You can add in adoption. Absolutely. You can add in all of those things. I said $600 to $1,000 in this bull run for Solana. Nowhere near. I'm going to stick to $600 to $1,000 for Solana in the next bull run. I don't think we go anywhere near $2,000. And I don't think we go near $2,000 in this bull run either. However, let's think about this for a minute. If Solana goes to $60 and we go back to $300 in 3 years' time, that's a 5x from where we are now for the fourth biggest crypto asset in the world. Take your money, buy Solana, and this isn't financial advice, I'm just giving you an example. Buy Solana, lock it away, or proof of stake it away, leave it for 3 years, and come back to a $300, $400, $500 Solana. Even if we go back to all-time highs. I don't believe Solana is going anywhere. I don't believe Ethereum is going anywhere. I don't believe Bitcoin is going anywhere for the next bull run. I do not believe, and I cannot say with a clear conscience, that Solana, XRP, maybe BNB will be. I can't see all of these chains surviving the next 10 to 20 years. I think Solana falls into the Ethereum and Bitcoin category, but still, things can go wrong, and it's a long way out. And I don't think 4 years from today we're going to be anywhere near $2,000 or even $1,000. I think we'll be coming back down. So I think maybe in 4 years' time we'll be back at $200. Maybe. So just be careful when you see this 2030 and pin your hopes on it. It's going to be 2029 or 2033. But anyway, I've done a lot of talking today. I've given a lot of opinion and not really read out a lot. And I don't know whether that's a good thing or a bad thing. I don't know whether you want me talking more on my opinion or giving you more information and giving you my opinion on that information. You need to let me know in chat. Solana is back in the spotlight. Ali Martinez, who we've covered many times on here, 1.077 million SOL has been withdrawn from exchanges in 72 hours, a sign of long-term holding and rising confidence in Solana despite recent volatility. That is a really good sign. And at the prices they're at, as I said, we are buying on the way down. And if we don't bottom at 50 and we go to 40, I will be doubling the amount we are buying at $40. And that's the way we're going to do it. So we're going to be buying 1, 2, 3, 4, 5 SOL now, maybe 4 or 5 SOL on the way further down, then maybe even 10, 20 SOL. Because you remember, if you're looking at a $40 to $50 SOL and you're looking at 3 years to get that back to $300, $400, $500, that's a really good return. Okay. So the market setback, we fell below 100. We've gone now way below 85. What are we at? $78 now. I just don't see this $2,000 target. It's not really giving me anything on why we're going to hit $2,000. I think, again, one of the things that you should do, if somebody gives you a target, find out how they get to their target. That's the most important thing. Now, you will hear people debate and argue why certain things shouldn't be used for giving you a price target for a token. I am going on an absolute tangent today, but bear with me. If somebody says to you that Tron is going to go to $27, and you look at it and you go, that's 27 cents, that's going to do 100x. So if I put $100 in, I'll have $10,000. That's amazing. And that means it's only got to go up $26.73. That's easy. Anyone can do that. That would give Tron a $2.6 trillion market cap. We've only got 2.29 trillion in crypto. Whoever tells you these things needs can't condone violence, can we? Needs a stiff word. Okay? Now, there are times when I will say Solana can easily probably go back to, let's say $400 because it's a nice number. That's a 5x. So what does that do to Solana? That puts it at 225 billion. 225 billion is still not the market cap of Ethereum, and Ethereum will move. Okay? If Ethereum, and I believe this will happen at some point, and I do believe it's realistic, I believe Ethereum can become a $1 trillion asset. That puts it at $8,000. So when you hear me say Ethereum to $6,000 to $8,000 per Ethereum, it's based on Ethereum going near $1 trillion. That's how I work this out. If you look at Bitcoin, I think Bitcoin can easily become a $4 or $5 trillion asset. That is let's call it a 3x from here. So that puts Bitcoin at roughly $200,000. Roughly. So you know where I'm getting my numbers from. And you will see people say, oh yes, but you're not taking into account circulating supply or emissions. You're not taking into supply the burn. I don't care about any of those things. Okay? I don't look at those things when I look at the stocks and shares of companies like Tesla or Apple or Alphabet. I don't give a monkeys about those things. I give a monkeys when it's a new coin and it's becoming an established coin. That's when I care about it. But when we are looking at the top 10, top 20 assets and we're saying where's it going to go, Hype was the perfect example. I said Hype would not go above $100. It would struggle. And the reason is that would give it a $24 billion market cap. So what we're saying is, and this was before Tron went on its run as well, we're saying that Hype is a more valuable project than Cardano, Bitcoin Cash, Doge, and Tron. Now, when we said that, Hype wasn't in the position it's in now with regards to building out its own mainnet and stuff like that. Do I believe Hype could become a $100 token from here? Yes. Because they've moved on and they've become bigger. They have decent plans. But we are going to see that $100 in the next phase of the market, not now. Now, you want to look at that and say, how close to $20 can I buy Hype? That's what you want to be saying. Because if, like I said, if Bitcoin goes to $50,000, Hype is going to go to $20, $23. It's not going to keep going up against a market that's just being absolutely spanked. Okay? Hype is going to get spanked as well. There's plenty of this going on, and that's what's going to happen. And the same goes for any token you pick. We talked about World Liberty USD1. We talked about it becoming the third biggest stablecoin in the world. People will say, oh, it's going to become the biggest stablecoin in the world. Is it going to overtake Circle with a $73 billion market cap when it's got a $5.3 billion market cap? So it's going to 14x and Circle not move? Of course not. Use common sense when you look at things like this. It's so important that you use common sense. And yes, market cap, circulating supply, all of those things all make a big difference. Of course they do. But you have to find some anchors to reality. That's what's important. Otherwise, you will follow every idiot alive telling you, and where's the example? I always love to give this example. Pepe to $1, okay? Pepe to $1 would give it a probably $150 trillion market cap, okay? But some clown will put out a tweet saying Pepe to 10 cents, Pepe to a cent, Pepe to $1, and people will read it and go, if I put $100 into Pepe and it does what he says, I'm gonna have $10 million. It doesn't work that way. Stop listening to illiterate idiots. Trump family's WLFI plans FX and remittance platform. The platform is aimed at capturing a fraction of the more than 9.6 trillion daily trading volume in the foreign currency exchange market. We kind of put a message out on Binance Square about this yesterday. Took me by surprise. Didn't think they'd go down the route of Forex. It's not got a problem with them going down the route of Forex. If you've got a stable coin and you're dealing with multinational companies, you're going to have a common denominator for those transactions, aren't you? You're going to use USD1. So it's a perfect utility for USD1 to do that. And this ties into everything else they're doing. They have their loan market, which is very similar to Maple Finance, where they have over-collateralized loan availabilities. They've now gone down the FX route. I think they're going to take a leaf out of Vanguard and start to offer really, really simple structured products where you can put in $10,000 in USD1 and, put it into the S&P 500, but the fiat that will be used will be USD1. These are really, really switched on people who really know what they're talking about. Okay, so I think this is a very, very good move, but it all comes down to traction as well. They can launch all of these amazing products. If nobody uses them, then there's no point. You can have the best blockchain in the world. Nobody uses it. It's a waste of time. Throw it in the bin. So adoption has to come for all of these things that they're launching, but I believe that they'll be tying up people to use this product. No exact timeline was given for the rollout. I'd expect within the next 3 to 6 months this will be rolled out. And as we've been saying all along, Trump has got 2.5 years in power to sort out stablecoin legislation, crypto legislation, while his sons build World Liberty Financial as an empire. That's what they've got, 2.5 years. So whatever you see them talking about, whether it be USD1 getting to 30 or 40 billion dollar market cap, that'll happen in the next 2.5 years. The Forex market probably be live in the next 6 months. Then it will probably take another couple of years to get rolling out. Well, that falls within the time remit. The Vanguard product falls within the time remit. So all of this is going to get done. The AI data centers that are being built in partnership with other people, they're all going to be finished in the next 2.5 years. So think about it. It's the thing with it's like Elon Musk. Solar panels, robots, transport, and drilling machines. They're all independent companies that he owns. If you're going to go and colonize Mars, you're going to need to build things with the robots, have energy, which you get from the solar panels. You're going to need transport to get there, rockets, cars, whatever it might be. And then you need a drilling machine to get down into the earth to get raw materials. That's why he's built them all. Everything he does, apart from X, is to promote Elon Mars, probably. ADA price rallies 4% as Cardano Foundation secures Layer 0 integration. This is what I want to see. I want to see Cardano partner with solid, good projects who were Layer 0 only this week talking about joining their board as an advisor. Cathie Wood, one of the brightest minds in crypto. Well, in finance, actually. She's joined them as a non-exec director or an advisor, whatever it might be. Then, literally 2 days later, Cardano partnered with Layer 0. Layer 0 integration, unlocking access to 400 tokens and 80 billion in omni-chain assets. The Cardano Foundation has confirmed a major interoperability milestone through an integration with Layer 0. Connection will bring Cardano into direct contact with 150 chains, 400 tokens, giving the network access to stablecoins, Bitcoin-backed assets, and tokenized real-world assets. The integration is being delivered under the Cardano Critical Integrations Program with oversight from a steering committee. Charles Hoskinson has called 2026 the most promising year in the network's history. He said at the Midnight Japan tour that Cardano will surpass previous milestones this year and expects the vision to be validated by 2036. He needs to stop this crap. We were supposed to have Bitcoin DeFi last year. Or was it 2024? We were supposed to have Bitcoin DeFi on Cardano last year. Let's give him the benefit of the doubt and say last year. Where is it? We need to see this kind of stuff. The token has risen, but it doesn't really matter in this market because even probably it's about 26 cents now, I think. There we go. Hasn't really moved. Not even 1% move in a week. This kind of stuff that Charles is doing, this is the kind of stuff they need to do every single week. If you look at Solana, if I had one word to describe Solana, it would be relentless. If I had one word to describe Maple Finance, it would be relentless. Okay? Just a second. Excuse me. Relentless in their pursuit of their goals. There are other projects. World Liberty Financial, again, relentless. Aster, Hype, relentless. They have not stopped, and they keep going. Okay? Now, it's all well and good having a Layer Zero integration and then sitting down in the corner for 3 months because you're tired, right? Meanwhile, Solana is onboarding traditional finance, it's onboarding real-world assets, it's onboarding more DeFi projects, it's onboarding more stablecoin usage, onboarding. Cardano, we've got Layer Zero. What's next? Where's the platform on Cardano that is going to utilize Layer Zero? Please don't tell me you agreed to use Layer Zero without several platforms for you to be able to integrate to tap into this. Because then we're looking at yet another year. And again, that's the problem with Cardano. The tech is great. Proof of stake is great. But for the love of all that is holy, Charles, get a move on, or that McDonald's outfit will become a reality. Aster Chain mainnet set for March launched. Here is why Binance-backed crypto perps matter. Now, again, Aster is kind of starting to see some integrations with Binance, okay? Aster was one of the 3 coins that I picked. I picked Pump, Aster, and World Liberty Financial back in whenever it was, October or November. No, it must have been September. October, sometime around then. I hold a very small amount of Aster. I hold more World Liberty Financial tokens than any of the other 2. Pump, I've got my bag. I bought enough. I thought I'm going to keep that. And again, their time will come. But Aster, again, you've got to tone down expectations because people talk about $100 Aster. It's never going to get there, is it? Never going to get there. Maybe $10, absolutely. $100? No. Walk away. It's going to launch a Layer 1 mainnet in March. The project is endorsed by CZ. The chain will power on-chain perps, governance, staking, and real-world asset markets. It's a decentralized perps exchange endorsed by CZ, and it's going to launch its mainnet in March. They shared the details over here. It was set up late testing in 2025. 50,000 people got involved. Why a dedicated L1 matters. Instead of remaining purely an application layer decentralized exchange, Aster is building its own network to support on-chain trading products, developer tools, integrated fiat on-ramps and off-ramps. That's a pivot. Running your own chain allows deeper control over execution speed, fees, and product design. Now, I'm going to say it again. I think I've said it 3 times already. When are too many chains too many chains? When are too many NFTs too many NFTs? Now, what I mean by that is we are seeing stablecoin layer 1s. We are seeing trading layer 1s. We are seeing real-world asset layer 1s. And that's great. And in specific instances, it's required. And those specific instances are, why is Aster going to want its own mainnet? It can have its own tools. It can set its own prices. So in theory, Aster could have a completely free layer 1. So All trading, everything that you do on Asta is completely zero fees. Or you hold 10,000 Asta in your wallet, which is connected to the blockchain, and all fees are free. There's loads of ways they can round this up. When it comes to real world assets, we've talked about this before, you can have KYC, LML, AML, all of that kind of, those tools can be built. You can do it natively on your own layer 1. If you use Ethereum or Binance Smart Chain or Solana, you basically have to use the same cookie cutter that everybody else uses. And I think in certain instances it's a better idea. But what we need to do is we need a way for wallets like Phantom and MetaMask to seamlessly connect to all of the different chains. So if I have $1,000 on MetaMask, it should not matter where that money is. I shouldn't care. I should put $1,000 into Phantom, and then I connect to the Asta chain and it works. I connect to the Hyperliquid chain and it works. I connect to Solana and it works. That needs to be sorted, because when we get retail coming back in drips and drabs, this is the stuff that will need to be fixed. And much as this is lovely, we've seen the launch of the Mantra mainnet, for example, and it's like I don't want to have to add 150 different new layer 1s every year just to get access to them. It needs to be sorted out, and it is a UI problem. Yes, it's a tech problem, but come on, your sole job is to be a wallet. Your sole job is to make my life easier. So MetaMask, Trust, Phantom, Solflare, just sort it out, make it so much easier. This is what fills me with dread, is I got sent a fee. We made a couple of videos over the last few weeks. We got sent our fee, and we were asked for a certain chain. We gave them that chain and we told them where it was. They've sent it to us, and the wallet that we're using doesn't support that particular chain that they sent that particular fee on. Now that's not a big job. I just install a wallet that supports that chain, get the money and move it out. I know that, but why should I have to? You should be able to send me, or I should be able to send you any amount of money on any chain and it arrive. Okay, we need to get past this point of Tariq sending 10 Litecoin over the AVAX network to Binance, for example, and it not arriving because he should have sent it over the Litecoin blockchain or the Lightning network. We need to get past this. This needs to be fixed. It's a big issue. Anyway, again, I don't think I've actually stayed on script at any point today. Right then, 11:58. We've done it. We have done it. Now, there is a lot still to come up. Tomorrow is Valentine's Day, and we are streaming Maple Finance at 11 o'clock. We're going to go through what's happened in the last 2 weeks. So what we do for Maple Finance is we used to make lots of videos, and then they became too big to make videos, and we decided to just do two monthly streams. So every second Saturday, I talk about Maple Finance. And to be honest, and I can't figure out why, but I really enjoy Saturday morning streams. Don't know why, but it's really enjoyable streaming on a Saturday morning. So I'm back tomorrow, 11 o'clock, to talk about Maple Finance. We might talk about the charts. We might talk about the stuff that they've been up to over the last couple of weeks. We might have a refresh of what we know about them. Who knows? But it's going to probably follow the same format that we normally follow, and that's going to be it. So have a great weekend. Mags has said thank you. Mags, how wet are you over there in Portugal? Because we are sodden. We are absolutely sick of being wet. Every time it stops raining, I go out for half an hour just to be outside. It's awful weather. And one of the guys, we have an office here, and one of the guys last week, he got stuck outside. I couldn't get in the office. I let him in, and his mother lives in Morocco. She said this is the worst wet weather since 1980, 46 years ago. Anyway, have a great weekend if you don't see me tomorrow. Remember, it's Valentine's Day, and yeah, I will see you in the morning. Take care.